So good morning, Destiny. I'm sorry, first of all, this is my apology that I have not been able to do this recording. I've done it, but I've not perfected it. But here it is. So let me just go straight down to business. So in this video, we'll be talking about marking at key levels, what is structure, and how the market moves on breakout and fake out at this moment. So now let's get down to business. So on TradingView, you have your TradingView app, and when we were learning FX, we were being told that market moves in three ways: it's either in a bullish format, in a bearish format, or in a consolidation format. Now, and our bosses then forget to tell us, and they forget to taught us that in every trend there is a lower time frame trend. There's a minor structure. Let's call it a minor structure because that's what most idlers call it. In every major structure there is a minor, like for example, if the 4 hours is bullish, there are chances on the 1 hour you get to find bearish structures that you can actually pick your trades from and make some whatever TP or SA you care to make or break even. So now today I'm here to break down those facts, how you can actually get some stuffs in those little structures of yours, and get to understand that there are what we call minor structures and there's what we call higher structures. Now sometimes they have to align, sometimes they don't have to align. Now let me just go down to, because I've been waiting for this perfect moment, because I've been trying to get a chart example of something much more constant, something much more consistent. But over the period of days, the market has not been able to display what I actually wanted. But I think on Friday and on Thursday, market did what I wanted to pitch, and here is it on display. So now let's go down to a pair called JP225. This is an indices pair. I mostly don't do currency pairs again because of Trump and Iran wahala and the rest of them. So now if you look at on this forward structure on this pair, now this pair is extremely bullish. Like the bulls are not here. And some people will say it's ranging, it's ranging, it's ranging. And some people will say, Edward, it's bullish, it's bullish, it's bullish. So now, if you look at this structure, let me just take it out for you. If you look at this structure entirely here, what do you see? Some people see a bullish structure, some people see a ranging market. What do you see? Now, let's get down straight to business. Now, on this 4 hour time frame here, if we look at this market, I'll say this market is actually ranging sideways with spikes. These are spikes. Spikes are weeks. These weeks, these are spikes. I'll call these spikes. These are all spikes. Market trying to break out. These are all spikes. Sure, you understand? But at the end of the day, something is happening here. A structure is going on here. Is that it's going on in a bullish format or is going on in a ranging format? But now this is on 4 hour time frame. Now, if you zoom lesser down to a 1 hour time frame, you get to see something clear. This trend is an uptrend on the 1 hour time frame, but there are people still catching sales, still printing sales, like I did. And so, sorry for the interruption, no verse. So now a lot of people see different things here, but me, Edward, I see a lot of things. I don't just. I tell people that nowadays, with Donald Trump being at the helm of global politics and global affairs, we don't just predict, we react. We don't predict, we react, because Trump nowadays comes up one morning and says hello, 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 and he ends it with thanks for your attention to this matter. And that's really, really crazy, because it's going crazy. Now if you look at this 1 hour time frame, this is what price was doing there on that 1 hour. Let me just zoom this a bit so you see. Okay, price was going down from here, creates a higher high. Okay, let's just do it. Price comes down here. Oh, oh, shit. Let's just go down. Price comes here, creates a higher high. What's happening? Okay. So price comes down here, creates a higher low, a higher high, a higher low, a higher high. It breaks down, it comes up, takes up liquidity above, just like that. That's how it's been doing, and our price is currently at this place. Now look at price is currently at this zone. Share you see here. Now what happened here? People were this is a bullish structure. Overall, it's a bullish structure. But people were printing sales. I was printing sales, I was printing buy. So how did I do it? Now in market structure, they taught us that this is how market structure moves. Market goes like this, goes up higher high, higher low, higher high, higher low, higher high, just like this. And when you reverse it to that's the same thing on bearish trend. And in a ranging market, it was market goes like this, up like this, like just like that, like with no clear proper direction. So, but me, I know that nowadays things has gone much more better than this. Like it's been much more developed than this. And where are we now? Like where are we? We're in a place of no man's land and in no position. So now this is what uh, now what market structure now looks like in much more advanced stage is that market goes from up like this, comes down, creates a higher high, comes down to create a higher low. Instead of maintaining this level here, instead of maintaining this level here, instead of maintaining this level here, she understand, market will just come down, break here, respecting this place. She understand, respecting this place here, then comes up, sorry, then comes up, sorry, then comes up, moves up here again. Now it has broken this structure here, this structure here, this structure here, while respecting this structure. Now you assume that this is a bullish trend. Yes, it is a bullish trend, but sometimes it comes back to say it comes back to say people can still catch people can still catch people can still catch sales here. Sure, you understand? People can see this is the levels that were respected by the market in an advanced structure. This one was respected, a higher high and a higher low. But normally, if price was moving, price would have at least respected this structure here without dropping here. It would have just respected here and continue. But price came in here and continued. Now there are people who this retracement you see here, this retracement you see here. There are people catching this retracement. People are catching it and the continuations. Now, how do you catch this retracement? I'll still explain this in and now I'll still show it on the chart. Now, this same chart like this now, you will see it too. It will still come and move from this angle here, drop down here, taking out this level that was supposed to be respected, taps this one, do like this, come back here, take out this one, take out this one, this particular key level here. This is a key level. It takes out this particular key level. Shey you understand? And you think that market is now bearish. Now you now will be now be waiting for price to come back to this place so you continue selling because price has broken this structure here. And look at what market will do. Market will just come down like this and boom, we are in a no man's land. Like it's going to take out this structure, this one here, take out this one that technically that is a bearish market, takes out this one which is now a double bottom. There's what we call double bottom liquidity, and we are now in a newer high. Now let me repeat, let me show you that on the chart. It happened on Thursday and Friday. I was like waiting for this perfect moment to show it to you. Now this is what I was talking about. Look at it here. This is a typical example of what price did. She understand. It smashed above all highs, all lows, and now look at it. Look at what price did. Look at the chart here. Look at the chart here. She understand. But look at it on the chart, on reality. Now look at what price did. Price came up from here, a higher high, created that social I'm talking about, a higher low. She understand. Went up, went up, come down, taking out these structures here, taking out these structures here, these structures here. You took out these structures here. Now people will be thinking that okay, if market comes back to this axis, we will sell. She understand. We are going to sell. Now what did price did? Price went to that same area and was showing a reaction of a sell. Do like say you won't come down, then boom, we have a new high. A new high was created, thereby taking out this structure here, taking out this structure here, and taking out this one, and it printed a new high. Now what the price did from there? Price still came back here again from that same place, dropped again. She understand, dropped again, went back up, and boom, we are seeing that same thing again. So now how do you catch this kind of levels? Is where your Fibonacci 2 comes in. So this is I just explained advanced market structure for you. So if you don't understand, just call my attention so that you get more deeper explanation from this market structure. So now this is just what price did now. And now if you look at, for every move that come up here, there is what we call using Fibonacci 2 to just catch every move. Now this is your Fibonacci 2. This is this one. Or you can just come here, this plus button below, this plus button, and just search for FIB, and that's fib retracement. You just add it to your chart. That's just it. So now if you look at the how to measure Fibonacci 2 is for now I just want to listen on 1 hour time frame. If you go down to lower time frame, you see it much more better. And let's look at 30 minutes time frame. You see what I'm telling you. Just look at that thing I was telling you about. This thing, this structure breaking down here. I just explained to you here. This structure that I explained to you here. The market going down here and still continuing to this state. Now look at it on 30 minutes time frame. You see it clearly now. Price broke this structure here. Price broke this structure here. Tapped here, and we have a new high here. These are all key levels. So now how do you measure key levels? Now key levels is measured with the Fibonacci 2. So now how do you do it? You just come down with your key level. Measure from the high to the low. So if it's a bullish trend, you measure from the low to the high. If it's a bearish trend, you measure from the high to the low. So the bullish trend is like the vertical, like the upside down of bearish, just like this one I just did now. So I've not gotten a practical example of a bearish market on the chart. It's just a bullish market I have, because I've been waiting for days for this thing to play out. So it finally played on a bullish scenario. So if I say a bearish scenario, I will still tell you. So you measure from down here, you measure to up. Now if you look at this zone here, from this zone here, from this zone, this 0.63, which is the golden level, to this axis is your area of interest. It's the only place where you should be looking at buying the market from. That's the only place you should be looking at. Yes, this is I want to buy. Now in the areas of confirmation entry, which I don't know if I've added to this, but this is what it looks like. So now if you look at this 30 minutes now, this is what. So now this area now is now your level of interest. Now you have to make sure that there is a reaction in that same area. Now look at how you do it now. In that same area, you can also zoom it very well and measure a fib again from it, from the low to the high. This place now becomes your entry. This zone now now becomes your entry. This is how you pick your entry. That's if you are an aggressive trade, you are aggressive, you don't wait for confirmation entries. Confirmation is a different class entirely. But if you're very aggressive, after this first place we mark, this first place we zoomed is your key, is your level of it, is your key level of interest. This is where you're looking at. If market comes to this place, that's where I'm interested. If it does not come to that place, I don't care. So that's how you pick your entries. Now, when you measure that box, you've measured it. You now measure from that low to the high of the box. That place is your like is your entry. Now, if you look at that place now, price reacted that place how many times? Let's count. One, two, and return a third tap before doing what? Before going up. Now that's on aggressive traders. So if you are taking a long from here, oh shit. If you are taking a long from this place, from that place, and like someone like me that does 2 hour always, and if you are just taking a long from that place, from this place here, and keep your stop loss below this structure here, and target a 1:2, you won't did very well. Let's say 1:2, because me I always do 1:2. Shey you see am, price did absolutely very well, and that's your GP for you. This for the bullish scenario. If the market gives me a sample of bearish scenario, a much I want to, I don't want to use past data, I want to use present data, I'm gonna do that video for you. But this is just this. So now just look at it. Price did that. But if you still use confirmation entry and wait for a break of structure here, for price to break structure here, okay, now let's go down to, let's say we did not use this box, we did not use this box after measuring, we just use this one, this main box. Let's say we took our long from here, from here. Okay, now let me just leave it. Now if you look at this same place here, price broke structure from this same week here. Price broke structure, like there was a break of structure confirming that. That's if you are a confirmation entry trader. You you like you wait for market to show its leg. You do not enter from this zone here, you don't enter from this zone here, you don't enter from here. So you're waiting for this break of structure this side. Then this is your break of structure. Now what do you do? After the break of structure, there's an FVG, which is fair value gap, which, if you don't understand fair value gap, I have to teach fair value. That fair value gap is an imbalance. If you measure for that fair value gap, after that break of structure, measure it from here, which is from the top, sorry, which is from the bottom here, the bottom here to the top. You will see that this is your entry, this is your entry here. So now if you now pick your trade here, you pick your trade here and keep your stop loss below it, and set a 1:2, like let's say keep your stop loss below this place, below this key level, you still have a 1:2 trade that played out. So either you take the from the an aggressive place as the below, you are still profitable. You take above it after the break of structure, which I will mostly do, break of structure, you wait for an FVG, you enter from the FVG, you will still make, you still take profit. 1:2, 1:3, you still print. So if I stay from here and print, stay there, I would have still done from this level here, I would have still done a 1:3. But me, I normally do 1:2. And if you have still waited for the break of structure, which this was the break of structure here, let me just remove this thing. This was the break of structure which I showed here. This was the break of structure, and these were the FVGs. This line here were the imbalances, were the FVGs. This line were the FVGs. And what the price? The after price broke structure to confirm that we're now in a bullish momentum. It came back, we retraced into that 63%, which is the golden zone of the FVG, and still continue buying from there. Shey you see am. And when e did hit TP, market came back and took away this level, and this same thing applies to everything that happened on this space, on this chart here. Shey you see, this suggesting, so every time price goes on, it comes back, it retraces, and we are in for a buy. Shey you understand, we are just in for a buy. So that's just all for today. And I think we've come to the end of this same sample scenario. So if you don't understand, call my attention, and we'll get to answer your questions and answers. And if there is a bearish scenario, I pray Baba Trump does something. We'll get to go it all from there. So thank you, and thanks for your patience.